Recently, I did a presentation on how to invest in real estate with the interest rates rising. There are so many people scared of what is happening in the market right now, and I wanted to break it down historically of how interest rate increases have really affected the real estate market, not only nationally, but in local case study examples like my hometown in Las Vegas. So in this presentation, I broke it down data point by data point. I went in depth on why I believe what I believe and what are the biggest risks you need to know about while you invest in this new environment. So with that being said, let's jump into the presentation. All right, let's do this. So we're gonna talk about how to invest in real estate with the rising interest rates, okay? Real quick, just so for those of you who don't know me, maybe you got sent this from one of your friends or something, they said go watch this thing. Obviously, my name is Ryan Pineda. Yeah, I've done over 500 plus house flips. We have over 480 rentals with the fund and my own single family with Airbnb. Done a lot on social media. Last year, we got over 250 million views on YouTube, TikTok, Instagram, podcast. And we have over 1,000 students at Future Flipper, many of you which are already on this call, which is awesome. And I also own a CPA firm. I have an e-com company. I have an NFT project, and I've got a bunch of other companies. So today, though, we're talking about interest rates and how to invest because it's something everyone wants to know. For me, you know, right now, as far as what exposure we have, obviously we have all the rentals we talked about, but right now I have about 50 active flips going on, okay? And on those flips, there's probably, you know, $20 million plus of debt. You know, we probably have like 10 luxury flips. The rest are pretty, I would say, entry-level type flips. So I've got a lot of skin in the game, and, you know, I hope that I don't get burned. But let's just see kind of what this is looking like. So real quick, what is happening currently? Well, as you can see, okay, I pulled the data. Right here's the data from 2020, kind of when COVID started, okay? And interest rates at the time when COVID was just starting were at, you know, 3.7, 3.8. And, you know, that was already pretty low. The market was on fire before COVID. And, you know, all of a sudden, COVID happens, rates go up a little bit, and then they drop back down. And then, you know, they go to just historic all-time lows. Like interest rates have never been, interest rates have never been this low, like in the entire history, right? You can see they raised again at some point last year around May, but like, you know, maybe 0.5%, then they dropped again. And now, obviously, this is what is tripping everyone out. Like, this is really high compared to this in a very short amount of time. You know, it was 3% back in January, and now it's almost doubled, which is a lot, okay? And so people have a right to be freaked out over what's happening, okay? In my experience, though, you know, you gotta look historically, not just recent. I've been in real estate since 2010, so I'm kind of looking at this from all my years and seeing what does this really look like? Well, when I got started in 2010, everyone thought the world was still in a recession and that things were gonna fall off a cliff, and that was when interest rates were around 5%. I remember buying my first house ever in 2011 at like a 4.75 interest rate. And at the time I was like, okay, that's a pretty good rate, which you'll see why here in a second. And then they end up dropping, and then they rose, and then, you know, started dropping pretty heavily again. They rose. Dang, dude, I don't know why my mouse is doing that. Then they dropped again, they rose, they dropped again, they rose, they dropped again, they rose. You know, this is back in 2019 when rates went to 5. And then they just dropped dramatically, right? In 2019 all the way through. So it's interesting, right? Because like they keep going up and down, up and down. Now this is like the most extreme example of going up in the shortest amount of time by far, but it's definitely not unprecedented for them to go down pretty good. Like this is actually a pretty similar steep curve over here for them to shoot up, to only go back down, to shoot up, to go back down again. So just understand like this has happened before, right? And when we look at historic data, okay, this is since 1970-ish, okay? Rates used to be at 7.5%, then they were 10%. They were at 17% at one point. Can you guys believe that? 17%? Like, we're tripping out over 5%, and this was 17% back then. And, you know, they dropped to 10, and, you know, if your parents were buying houses in the 90s, you know, they were buying it with a 10% interest rate. And slowly but surely, rates have just pretty steadily declined when you've looked at it in the long haul. And what's interesting when you look at this chart is, like, up until this recent raise, like, it was steadily going down, like, pretty much perfectly until it, like, just literally couldn't go down anymore. And that was why there was so much talk about negative interest rates, because there was literally this perfectly straight path the last 30 years before it finally hit zero. And now they've kind of had to reset it a little bit. But the point is, if you just look at this historically, rates are still very low. All right, so here's what we know from all of this, okay? What usually happens when rates rise, okay? This is like the typical perceptions people have. Purchasing power for real estate goes down, which is true, right? Like, you know, you used to be able to afford a house that was $500,000 because your mortgage was this amount, and now, you know, your mortgage is that amount, but it buys you way less home because your payment is so much higher, right? So that is true. Nobody can say it's not true. Less refinances will happen because, you know, rates are higher. So why would you refinance if you've got a really good rate right now, okay? Typically, the demand for real estate also goes down because, you know, people have less purchasing power, people aren't as attracted anymore. You know, I remember when rates just kept dropping, people were like, dude, this is the best time to buy, you know, yada, yada, yada. And, you know, all that stuff. But anyway, so typically demand for real estate goes down and all that stuff. So let's just see what the charts are saying about this, okay? So for one, as we look at 2020, all right? This is when COVID happened. Typical median sales price for Las Vegas, or not Las Vegas, for the entire United States. It was about $330,000. It dipped a little when COVID happened, barely, right? It dropped not even, you know, a couple percent. And then all of a sudden we've seen it just skyrocket. I mean, look, isn't this crazy? In 2 years since COVID, it's gone from basically $320 to $430. Like, it went up over $100,000 in 2 years. So essentially any property you bought is worth so much more now. Insane. Now let's look at this since 2010, okay? Back when I was first starting in real estate, prices were $220,000. That was the median. And it was pretty flat for about 2 years, essentially. And then all of a sudden, it just started picking up in 12. And ever since, it was just on a steady growth curve. And then, you know, it kind of flattened here for about a year, and then it just skyrocketed again, okay? Make note of this little flattening here, okay, for later. And let's look at the historical median price data, okay? So this is kind of hard to believe now, but back in 1965, I don't even know what this is, but it looks like $20,000 was the average price of a home. And it was like that for basically 15 years. And it wasn't until 1990-ish that the average price of a home broke over 100K. Then it took another 15 years to go over 200K. Then it took another 15 years to go over 300K. And then it took only about 7 years to get over 400K. Isn't that interesting? You know, it was pretty linear until recently as far as growth goes. So I'm just giving you all this data so you guys can understand the history, and then we're going to tie it all together. So if you're just like looking at this like, okay, what does this all mean? Just wait. Also, just take note here, right? In 2008, when the crash happened, okay, you know, it bottomed out around 2009 and started its recovery. even though that crash happened in this span, like in the end, right, if the average price was at 250 and then it got all the way down to 200, I mean, if you're buying really deeply discounted deals in the whole United States, like every market's different, right? Vegas got hit really hard, but if you were buying a deeply discounted deal, you know, that was had a 250 price and all of a sudden it was, you know, $200,000, that's what it was worth, and you bought it for 170 because that's what you do, you get good deals, you would have been just fine, right, during this time. Yeah, it sucks that prices went down, but you would have still had equity. And if you would have bought even at this peak right here before the crash today, you would have obviously made a good investment. It's up way more. You know, it's at 15, you've paid off 15 years of mortgage, like it's still okay, okay? So that's the historical data. So the question is, knowing this, what should you do about what's happening right now at this very moment? Well, if you buy real estate with the intention to hold, you will always win. Like, that's what it comes down to. At the end of the day, this sheet just keeps going up every year in the long run. And I want to reiterate this so much because I hear this from a lot of newer investors who are looking to buy one home, okay? And people who are buying one home, like, are just trying to time the market, all right? They're like, man, you know, is it a good time to buy? Should I wait a couple months and this or that? And the question is always like, well, what's your plan? Do you plan to hold this for the foreseeable future? Like, what are you doing? Yeah, I'm gonna live in it for the next 5 years, right? Then I'm gonna rent it out. Well, if that's your plan and you do plan to truly hold this for a long time, it literally doesn't matter if you bought today and there was a crash here tomorrow. Because in the end, in just a couple of years, you're gonna be back to where you were in, like, literally the worst crash of all time, okay? The worst crash. That was the worst real estate crash of all time. And you would have been okay a couple of years later, okay? So, and that's just price-wise. If you had enough, you know, of a spread where you were cash flowing all those years, like, in the end, it doesn't even matter what the price is because you're holding and you're cash flowing. And if you have it from a 15-year perspective of, like I said, this worst time ever to buy in most people's cases, if you had a 15-year perspective on it, you're right here today. You know, this house that you paid top of the market for at $250 is now worth $420, and you've paid off 15 years of your mortgage. You know, if you had a 15-year mortgage, you own this house free and clear today for $420. And if you got a 30-year mortgage, you know, you haven't paid off half because of amortization, but, you know, you bought it for $250, you might only owe $150 on it now. So you've got a ton of equity just buying, okay? So if you're buying in the long run, okay, and that's your perspective, everything we're talking about does not matter, okay? And if you're getting a good deal and you're worried about being underwater on it, if you got a good deal and it was worth $250 and you bought it for $170, $180, you were still okay at the bottom. You were still had equity. And that's in the event of the worst crash ever. So I just want to put things in perspective because a lot of times we can get so caught up in the day-to-day. How many of you guys like get caught up in the day-to-day and you have a hard time like keeping perspective? Let me know in the chat box because it's just something I see all the time, and I try to like preach to people like, if you play the long game, you're not going to get so distraught over like a little crap that happens every day because it's just so easy to get caught up in the day-to-day. So here's something you need to be aware of, okay? That's the long game, the rental game, all that stuff. If you're flipping or wholesaling, okay, you got to watch supply more than anything. So back in 2010, I tell this story to our feature flippers a lot. You know, when I got in the business, there was about 8 to 10 months of supply in Las Vegas because Las Vegas is it got hit hard. To put that in perspective, right? Like in 2021 at the low point, there was less than 4 months. And this is a whole United States. And in Las Vegas and big metro markets, the supply is less than a month. Like, it's crazy how low the supply is. But like when you take account all of the United States, this is what the graph looks like. And if you were a realtor back here and you were trying to sell a house, in a market like this where there was 9 months of supply, it was super hard because everyone has choices. Like they could pick from any other house. So for yours to sell, it better be priced lower than everyone. It better be better than everyone. Like, that's what it would take for it to sell in that market. Whereas, today, in all of this time over here, we've been selling everything like it was nothing. Like, we could throw a piece of crap on the market and people are going to buy it. They don't have a choice. There's nothing else they can buy. But, the reason that I want you guys to watch this is because this is typically what drives pricing in real estate, is the supply. And so, when supply was higher back here, it was flat. Okay, if you remember the screenshot from earlier about the median price, right here in 2010, it was pretty flat. Like, it was not going up. And that's because supply was high. Now, as you get lower supply here from 2012 to 2018, like, supply was pretty stable. It was historically low. Look at it from here. 2012 to 2020, it just skyrocketed because supply was low. All right. And as you got down here, you saw this sharp dip in supply because of COVID. And what did that do? It caused the sharp increase in price. Like, you guys see how correlated supply is with price. Like, it's pretty much the indicator of what is going to happen with price. Okay. So here's the deal. We know that going into it, we know that supply is still low right here as far as in the whole United States. And, in most of the markets where I see people on this call at, supply is way lower than 6 months. It's not even close. But this takes into account all these rural areas that, take a long time to sell. So I just want to show you guys a case study. All right. Does this increased supply actually mean there's going to be a recession for what we're doing? Okay. Well, let's look at Las Vegas, since I know this market better than, any other market I know. I pulled the data for all of the homes on the MLS in Las Vegas. And I looked at the supply the last 5 years, because for the last 5 years, that's when I've been flipping heavy. I've been doing over 100 flips a year pretty much since this point. Okay. 17, I should say. I did about 50 flips over here. But, when I got into this in 2017, the supply of houses was 4 months. 2018, it was 2.5. And, it was really low. This was the first time I made over $1 million flipping houses in 2018. We did about $2 million in profit that year. And it was interesting because, it was the first time I saw prices really increase, like, at a fast rate. I was like, dude, this is nuts. How fast these things are increasing. I'm making a ton, way more than I thought. But then in 2019, supply increased quite a bit. And the reason supply increased was because interest rates increased right here. At this point, the government decided to raise interest rates like they did. This was pretty much the last time they raised rates significantly. And it caused a huge supply shock. And I remember in 2019, it was the first time I ever lost money flipping houses because I was being a bad investor. I was getting caught up in the appreciation, and I was buying based on speculation of like, oh, well, prices are going to keep going up like crazy. So, I'm going to buy this house. It looks like I might only make $10,000 on it. But, if things keep happening, I might make $30,000, right? Well, they didn't. Like, prices pretty much stayed flat in 2019. Like, it went up a little bit, but for the most part, on a flipping cycle, it was flat, because we don't sell it from here to here. We sell it from, this point to like this point. So, 2019 was a rougher year for me because it's the first time I ever experienced big supply increase. And, it sucked, but that is what it was. Well, 2020, we all know what happened, right? COVID started to happen, and things just took off supply-wise. Like there was nothing. As you can see here, less than 1.5 months of inventory, even today. And, the reason I say it's less than 1.5 versus like I've been telling a lot of people, like we have less than 1 month. This data is the entire MLS of like all of Las Vegas. So this includes all of the towns around Vegas that, have more supply. And it also includes like condos and other things. So if you were to just look at single family homes in like the main Las Vegas area, which is where we're buying, supply would be even less. But anyways, this is what Las Vegas has looked like the last, bunch of years, right? Like supply, we had an interest rate increase, we saw supply increase, but what happened with pricing? Well, in the last 5 years, the average price of a home used to be like $220 in 2017. In that same time frame, it's essentially doubled. Your house doubled in value if you just bought pretty much any house in Las Vegas at market value. Now, a lot of the houses I was flipping, they tripled in value in the last 5 years based on what I would have bought them for and all that. So it's kind of interesting to see just what's happened the last 5 years and, what you see with an interest rate increase. Like 2019 was that first year they increased it, and it was pretty flat compared to all these other ones, but it was still growing like at just a much slower rate. And then you saw them lower rates and supply dropped and prices, exploded. So it's really simple. When there's less supply, price goes up. When there's more supply, price kind of stabilizes. But even at a supply of 4 months, okay, prices still were creeping up. Okay, and I want you to keep that in perspective, because with where we are today, let's just say, and here in Las Vegas, let's just say here in Las Vegas, the supply shot back up to 3.5, 4 months. What do you think that would mean for pricing? Well, we kind of like already know what it means. It just means it's going to be more stable. And, granted, people will say, well, yeah, that was at a lower price point. That was when it was $270. Now it's $400. It's not going to be the same. Even if you said that, and instead of it just slightly growing, it just was straight flat, or even a little negative, which I don't believe to be the case. But like, even if it was, you can still flip and wholesale. Like, it's not a big deal. If prices are stable, I would argue it's actually easier to flip and wholesale, because you're not getting unrealistic sellers who think the market is going up. And, everybody's kind of playing on the same playing field. I remember back in 2020, it was harder to flip because people didn't really know what was going to happen with the market, right? At this point in time, because the stock market had crashed. Pretty much the same thing we're talking about now, right? Like, a lot of bad things were happening outside of real estate. And so when we would talk to sellers, we were trying to get a deal, and they were like, well, some sellers would be like, yeah, I want to sell. I think the market's going to tank. And so we'd make an offer, but they would still want like where market value was today. And we'd be like, well, if you think it's going to tank, why would we pay you what it's worth today? Like, we think it's going to tank too, just like you do, right? It's all negotiation. And, it was kind of hard to make a deal if we're both kind of thinking that way. But it's also harder to make a deal over here where everyone thinks the market's going up. And so, if everyone thinks the market is going up, then, they're going to want more for their property, because they're like, yeah, it's worth 400, but it's probably going to be worth 420 here in the next few months. So why would I give it to you for 400? But if it's purely flat, nothing is happening, theoretically, it's easier to make a deal because everybody's on the same page for what's happening, okay? But I want to show you this too, because as somebody who's flipping luxury, I am really interested in how this is playing out, because I have these luxury flips, and I actually just bought another one for $2 million. We just put one under contract that looks like it's going to sell for 3.2 when we're done. So I took all of the data the last 6 months in Las Vegas, and I said, how many sold as a loan? Conventional loan right here. conventional, it could be jumbo, whatever. 92 houses sold as a conventional loan. And this is important to know because I'm thinking, okay, if rates raise, like rich people are going to be hit the hardest because, you know, your loan on $2 million plus is going to be significantly higher, like thousands of dollars higher than, you know, everything else. So, you know, like it's pretty, you know, important to know this for the luxury market. Well, at 100, if you look at how many sold cash during the same time period, 107 went cash. Isn't that wild that once you get over $2 million, the rich people don't even get affected by interest rates? They're just buying it cash, you know? So I saw that and I was like, you know, I'm just gonna go buy this $2 million house. Like at the end of the day, most likely 50-50 chance I'm getting a cash buyer. And if you've been paying any attention to what's happened since COVID, the rich are getting richer, you know? Inflation actually helps rich people. Like that's kind of the dirty secret that nobody addresses. Like, I've become way richer during inflation because I hold assets. You know, all of my real estate the last 2 years has gone up tremendously. Like we saw it. You know, even if you bought crypto, even after this dip, right? If you bought crypto back in 2020, it's up way more, right? Like I think Bitcoin at that time was like $5,000. Yeah, we're gonna ask questions here at the end. So, yeah, so like
specifically to that point that you made about cash.
What about it?
So my understanding, and as someone that's done a cash purchase, is we go in, we offer to pay cash. It's really just that we're not worried about getting financing. We know that we'll get it, but then we go to finance. So I just wanted to point out that little clarification.
Yeah, I mean, a lot of guys will go finance and refi after buying it cash, but at the end of the day, the last 6 months, people are buying these $2 million plus homes cash more than they're just getting a loan to buy it. So yeah, it's pretty crazy. Now, for me, the answer is very clear. Like at the end of the day, higher interest rates are going to increase supply. Like that's what's going to happen, right? We're going to have more supply as we saw in all of these other instances where interest rates were raised. But increased supply just doesn't mean it's a recession, okay? Understand that. Like more supply obviously hurts demand, but it doesn't mean recession. And as I just showed, like luxury buyers are looking for places to put cash. Like at the end of the day, they see the same things we see. Like if you're not going to put in stocks because it is going up, or like, you know, they're being volatile right now, or whatever, like at the end of the day, house or real estate and everything else isn't a bad place to put it. So here's another thing to think about, guys, okay? Many people don't want to sell, right? This is the reality. Hedge funds, a lot of people aren't talking about this, but hedge funds aren't really selling the homes they buy. The people who, just think about this, hedge funds, they're buying a very specific product. Most of them are buying newer homes, like 1990 and newer. They're paying cash for them, and they're outbidding everybody else to buy them, okay? So we've personally sold many houses to hedge funds, and they've paid more than retail buyers with cash. And you might be saying, like, why would a hedge fund overpay so much for a home? Well, for me, I've been watching this since 2010, right? Like hedge funds have been paying market value or more for homes since 2010. And I remember as a young realtor wondering how they're gonna make money. Like that's so stupid. Because I was thinking from a flipping mindset, like, yeah, you cannot make money if you buy it at market value today and you wanna sell it in a couple of months. But if you're a hedge fund and your time frame is 5 years, as we've talked about, they don't really care what happens for the next year, 2 years. They're looking 5 years down the road. And so for them, every time they buy a house, they are not selling it. The house is not going back on the market anytime soon. And what actually happens with these hedge funds is when they do buy all these properties, they can't flood the market with all of these homes, even if they wanted to sell. What they're gonna do is go sell the homes to another hedge fund as a package. You can't just go sell billions of dollars of real estate on the MLS like tomorrow, because they know too, it would hurt their exit. It would hurt the market. They wouldn't make as much. And it'd be way harder. Like to go sell that many individual properties is a headache. So when they do want to exit, they're just selling to another hedge fund who is going to take the same exact outlook that the hedge fund previous looked at. And they're going to say, well, yeah, we're going to pay market value for this, or maybe we're getting a slight discount, or maybe they pay above market value because they just want to get assets, right? Who knows? But they're going to buy it and say, yep, we're going to hold this for the next 5 to 10 years, and then we're going to sell them all, and we're going to make a killing. Because literally, if you wait 10 years, you will always make a killing, even if you bought at the worst possible time. And if you bought at the best possible time, aka 2010, and you sold in 2020, you really killed it, especially if you picked the right market. So yeah, these hedge funds, they ain't selling. Like once they buy it, that house is off the market forever, essentially. Also, here's something. Many owners who purchased 5+ years ago are priced out. So this is really true because so many owners right now, let me know in the show of hands for you guys on here, how many of you bought a house 5+ years ago that is a primary residence, okay? And are you thinking about selling that house and trying to buy a new one right now? Like, let me know in the comments because I want to know. If you're on this call, you might be thinking of that because you're a real estate investor, but I can tell you, the normal mom and pop person is not going to do it. If you bought this house for whatever, 200 grand, and it's now worth 500 grand, and you're going to sell it, and maybe you sell it for 500 grand and you make $300,000 on it. You have to now figure out, what am I going to go buy, right? And if you're just you're just going to go buy another $500,000 house. You're going to go buy another $600,000 house, and now your mortgage is going to be so much more unless you just put all of that equity as a down payment, okay? So on one hand, if you do sell, it's because you're just going to make a lateral move. Like you're going to sell high, but then you're going to buy high. Or you're selling because, your income did truly go up and this house is no longer big enough for you. And so you're going to go and get a bigger house, but you're going to pay a lot of money for it. But for most people, they simply can't afford it. That their mortgage might be friggin' $1,200-$1,500 and you can't rent for that anymore. You can't buy a house like that for whatever it is you're accustomed to. So many owners who have all this equity just will choose not to sell because they're priced out. Also, recent buyers aren't going to sell because they have low fixed rates. So all these guys who bought in 2020, everybody thought they were crazy, but they got a great deal because now that property has gone up probably at least 30-40%. I've seen some houses in Vegas that have gone up double, right? That we've bought in 2020 that are literally worth twice as much. I bought my parents a house, as an example. I bought my parents a house in 2019 and I was super proud of it. I paid $260 grand for the house. And I just upgraded them. I moved them into a new house in 2022. So it's been about 2.5 years. They just moved out and I'm looking at now the house and I'm saying, dang dude, this $260,000 house is now worth over $500,000 in just 2.5 years. So I got rewarded for, being a good son, because I would have normally flipped that house. And at the time it was worth maybe $310,000, $320,000 as a flip. I'll make an extra 200 grand by holding it, or, I'm gonna rent this thing out and cash flow. And, this is something to think about too, is a lot of these houses that have been bought in the last couple of years, they probably didn't cash flow at the time. And a good example of that is my parents' house, which I'm telling you about. So the mortgage was about $1,600 and the market rent at that time was like $1,800, $1,900 for that house. So once you factor in everything, it was going to be like a break even at best, which was fine. It didn't matter. I was buying it for them. So I wasn't too concerned about it. But now as I look at what to do with this house, I'm like, well, do I sell it and, take a $200,000, profit? I'm going to pay taxes on it and all this stuff. I've got a great interest rate on it. Like, if I sell it, I lose all those things and I got to pay tax. Or do I just keep it and, it will now rent for I haven't looked up the full comps, but it's probably going to get about, I would say, over $3,000 a month. And so now this house that didn't cash flow 2.5 years ago has a $1,600 mortgage. It has a good interest rate and it's going to rent for $3,000 plus a month. Do you think that I should sell it in my position? What do you guys think in the comments? Take 200 grand, lose the interest rate, pay tax, or let it ride, make $1,500 a month cash flow, right? So this is the problem. This is the dilemma, right? Everyone's saying let it ride. This is the dilemma that every seller is facing who has bought in the last few years, right? Why would they sell? That's the problem. And if you even bought a house, say in 2021, and you were thinking of selling because it's gone up so much, well, your interest rate was in the 2%, it was 2 to 3%. And now you're looking at it and you're saying, man, do I want to sell this? I might not ever see a 2.5%, 3% interest rate again. That's a lot of people's mindset. And so you're thinking okay, well, I'm never going to get this rate again. So if I sell this house, it's long gone. I don't know. A lot of people just are going to choose not to sell because of that reason. And they want to keep their low fixed rates. They, quite frankly, if they did sell, right? Let's just say somebody bought 2 years ago, year and a half ago, and their mortgage is $1,600. Well, that same price point today, which doesn't even exist, right? It's gone up so much since then, but to buy a house at that same price point would cost you, maybe it's a $2,000 mortgage now, right? Those are things you have to consider. So yeah, these are my points that I just don't think people want to really sell right now. And when that's the case, what do you do, right? It's just tough. So for me, when I look at all this, I say, where will the supply come that will crash the market? Because in the end, we know supply is what really crashes the market. And nobody's really given me a good answer yet. And for me, the best time to buy is when people are fearful. We made a lot of money in 2020 when people were fearful. We got some really sick deals. And, I'm happy I chose to buy when most people were scared. And, it's the same is true. Isn't Warren Buffett the guy who says it? Be greedy when everyone's scared and, be scared when everyone's greedy. Well, I think there's plenty of fear going on right now with all the stuff. And that just tells me it's a great time to start getting greedy. And, this played out in 2010, played out in 2020. I've seen it play out twice. 2010, everybody's still scared because they're friggin' still shocked from the previous recession and they didn't buy. I remember showing houses as a realtor in 2010. A house was $350,000 back in 2007. This house was brand new built, sold for $350,000. And in 2010, that same house was listed on the MLS for $90,000. It only been, it looked brand new. I don't even think anyone lived in it, right? I remember showing the house to this guy and I'm like, this is a really good deal. This house is brand new. You don't even need to do anything. It just sold for $350,000 a couple of years ago. Rates are lower right now. It's a great time to buy. He was like, nah, I think the market's going to go lower. I think it's going to crash. And I'm just sitting there and I didn't know any better because I was a 21-year-old realtor who didn't know anything yet. But I just remember sitting there how much lower can it go? You can't build a house for $90,000, brand new in Las Vegas at this location. how much lower can it go? Is it going to be free? You can't make this 2,000 square foot home free, you know? So I just remember being kind of dumbfounded why people thought that. And then I remember in 2020 looking at this, and, you know, the numbers and data all said what I just showed you of, like, you know, supply is ultra low, rates are low, you know, yeah, supply is going to go up a bit because people are losing their jobs and they're forced, but this is not like any kind of recession where there was something, you know, inherently wrong with the system. Like, the government just chose to shut the world down. Like, and that is what it is. It was like an artificial recession with shutdowns. And I was like, I'm just going to keep buying. Like, I don't think this is really true. And when you look at 2022, like, it doesn't appear to be any different at all. Like, I just don't see where supply is coming from. I don't see any signs of any foul play. I just don't know how there would be a recession at any point anytime soon. And even if supply increases, like we said, and it just, instead of skyrocketing up, just slowly goes up, you know, what are you gonna do? Like, so at the end of the day, all I can say is don't be the fearful person waiting for the crash. You know, in the last 10 years, I can tell you, I've seen this firsthand. Look at this. In Las Vegas, back in 2012, the average price of a home was $120,000 in Las Vegas. I wasn't lying to you when that house I said was $90,000. It was nuts. And like, all these houses, Las Vegas is like a new city. You know, we don't have all these old homes on the East Coast and the Midwest. Like, everything here is relatively new. And Vegas is obviously a growing city that people want to move to. And I just remember seeing these prices and I'm like, man, this is crazy. And, you know, everybody was scared to buy here except the hedge funds. The hedge funds knew. And they doubled down and bought everything they humanly could at this price or above. And then they exited over here. And they made a killing. You know, every year I've heard the same story of people saying it's going to crash. The same thing happened in 2013, 2014, 2015, 2016. You know, I've seen it every single year. And, you know, as I started to get way deep into it and I had a lot of skin in the game, you know, 2019, when they had that interest rate raise, I remember a ton of the house flippers around me, big guys in Vegas, were freaked out. You know, they stopped buying, they, you know, were taking hiatus, and it just was the wrong decision. They shouldn't have. The same thing happened in 2020. All these guys started getting scared and, you know, all this, and I'm like, why, right? And it was they literally missed the biggest gain ever, you know, in terms of appreciation. So my point, you're gonna hear people say the world's falling every single year. Even during literally the biggest appreciation in like the history of real estate. Isn't that crazy that when real estate is flat, people are scared because they're like, oh man, it's flat, it's not going up, it's gonna go down, you know? And if it's going down, people are like, it's gonna keep going down. And if it's going up too fast, they're like, dude, this is a bubble, it's going up too fast. It's like, dude, when is it ever not gonna crash? Like, it seems like no matter what the chart does, everyone thinks it's gonna crash because of something. And I'm just like, people are stupid. Like, it just doesn't make sense. So, yeah, this is kind of the thing. Do not be the fearful person waiting for the crash. And I'll give you a quick plug. I told all you guys, a bunch of you guys are gonna be at this, but you know, we have an event coming up at Future Flipper that I wanna invite all of you guys to. This is from an event back in January. These were all the people we honored who made over 7 figures at Future Flipper. They all made over $1 million in 2021. And I expect that in 2022, the stage will probably be, I don't even know, for all you all-stars who are on here, how many people are gonna be on that stage this year at the end of the year? I mean, there might be 50 to, I don't even know. There's gonna be at least 50 people for sure that are on that stage who made over $1 million. And, you know, I wanted to put this text, like my buddy Johnny, I don't know if you're on this call, but he sent me this text last week and he was like, basically saying, dude, my net worth crossed over $1 million last week for the first time ever. And I remember him telling me the story of when he got into Future Flipper, that he was literally had a negative net worth. And he's not the first guy who joined Future Flipper that had a negative net worth, by the way. We've had quite a few negative net worth people join because they knew at that point, dude, if you already have a negative net worth, like, what do you have to lose by going in even more, right? And it cracks me up, because it's like most people who are in that situation with a negative net worth or barely making anything, they think that they have more to lose. And it's like, no, dude, when you have nothing to lose. Like, that's when you should be taking every risk to get out of the hole and do it. It's the people who have a lot that have more to lose. Like, I have a lot to lose if the market tanks, right? Because I have a lot of assets, and I've accomplished so much to this point, and if the market did turn and it caused me to lose it all, like, that's what, like, I have a lot to lose. If you don't have a lot of money, you literally have nothing to lose by taking a risk, okay? So Johnny, the point I bring this up is, he joined in January of 2021 with, Javi just said, $100,000 in debt, and he's about to do a $500,000 flip this summer. And then he bought himself some Cuts t-shirts to celebrate his $1 million net worth. So, at the end of the day, dude, I just want to see so many people on that stage this year, and it's going to be epic. And he's just an example of one story. But yeah, I'd love to see you at our upcoming mastermind. We've got some awesome guest speakers. It's June 29th to July 1st here in Las Vegas. Carlos Reyes, good buddy of mine. I'm actually speaking at his event here tomorrow, actually, or 2 days from now. He's got a bunch of seven-figure businesses, great, wholesaler. Heather Blankenship, she's amazing. She absolutely crushes RV parks and glamping. She's been on my podcast. They've both been on my podcast. You should definitely check them out. Heather's making over $1 million a year in cash flow just from RV parks and glamping. Pretty insane. Tommy is going to go talk about asset protection and how to, basically protect yourself from different things. I got my buddy Doug Hopkins and Darren Dame. They did over $25 million last year in their wholesaling business. Literally, like $25 million wholesaling. And they're the ones who run my TV commercials, and they're going to be talking about TV and like how they've built their business. Freaking crazy. And then we've got Gino and Chandler. I mean, these kids, I call them kids because they're literally like 21 and 22 years old, and they've already built a multiple seven-figure virtual wholesale business. And so they're killers. All these people are going to be speaking on stage. Obviously, I'm going to be speaking on stage too, and you're going to meet a ton of my students who are absolutely crushing it as well. And I'm going to be talking about some new strategies that I'm going to have at the event. So I'm going to talk about how I personally plan to use all the information I just gave you on what I'm going to do in this upcoming market, like actual strategic things that I'll be changing within my company so we can make the most during this time while everyone is fearful. I'm going to also be showing some other risk that you need to be aware of, that you need to be aware of if you take the same strategies that I take, and some other strategies that you can take as well. Because if you know that all this stuff is going to happen, you need to start making a plan for it. Also, you're going to see how other 7 and 8 figure entrepreneurs plan to thrive. All those guest speakers are going to talk about their plans coming up in the markets. Our students are going to talk about their plans. Like, it's going to be really cool. So here's the deal. If you use, all you got to do, if you're on your computer, get that QR code, okay? It's going to take you to our sign-up page for the event. And if you use that promo code RATES, get it, interest rates, or you can click those links right there. Roham's posting them. Roham's got my picture on his Zoom, interesting. But 50% off the event. So the event's $3,000. You'll get 50% off for attending this webinar, so it'll be $1,500, and I can tell you it's the best $1,500 you could possibly spend towards your future. It's going to be a 3-day event. People can come in on Wednesday. We've got this huge welcome party, and then the next 2 days we've got just a whole day of events and speakers and everything else. We do some masterminds, We also have after parties each day because it's Las Vegas, and any of the future flippers, you can tell them what you guys kind of do in Las Vegas. But yeah, future flippers are known for getting a little crazy in Vegas and having fun, which is cool. I participated in the last one, and that was probably the last time I'll go to the club with you guys. It was too crazy. But yeah, 50% off. It's epic. There's definitely cap seating. We've already sold over half of them, and I expect after this webinar, a bunch of people are going to sign up. So it is going to fill up quick, and this promo code is not going to last more than 24 hours. So if you want to sign up, make sure you do it. We also have a VIP day here at my office on Wednesday, so you could purchase that and get to see my operation firsthand and how we do it. And it's going to be a great time. Also, you're probably wondering, why are you showing this picture of you and your wife, and what's that facial hair on you while you're eating a Quest bar, and why is it next to a couch? Well, the reason I wanted to include these pictures was because this represented a time in my life where it was pretty much where I would imagine many of you are at right now currently. This was back in 2015. My wife and I didn't have a lot of money yet. Obviously, I was still flipping couches, trying to make some money. Like, I didn't have a normal job. I didn't, have anything. And that was when I made the decision to start flipping houses. I remember I would deliver couches and sell them while, listening to these podcasts in the car. And that was how I learned. Like, I just would absorb as many podcasts as I could as I would listen, or as I would deliver couches every day. And I would spend about 4 hours a day picking up and delivering couches to make, the money we needed to survive. And I would just be constantly learning, trying to figure out how to get into flipping and wholesaling and stuff. And, I remember Mindy, my wife, I would have to incentivize her to come flip a couch with me. And so, because I would usually do it alone, but I'd be like, babe, if you come flip this couch with me, we can go, on a date night. And so that's why we're dressed up to go flip a couch, because we were about to go on date night to not any of our date nights that you see today where we're, eating at these fine dining, but literally to go eat $10 tacos. That was our date night. We go to this place called Taco El Gordo, which, is the best tacos in Vegas. It was we'd go get 4 or 5 tacos for $10. And the reason I always brought her there is because it was up north in Vegas where that was the only Taco El Gordo at the time. And, I didn't ever go up north other than to go deliver or pick up a couch. And so I was like, hey, I'm going to go deliver this couch up north. We can go to Taco El Gordo after for date night if you come with me. And so that's that picture we took. And I just wanted to include it because I just want you guys to realize it was not that long ago that I was pretty much just like probably most of you watching this webinar right now. 2015, people said the freaking market was going to crash. I didn't have money. I had to max out all my credit cards to buy that first flip. But the advantage you have that I didn't have was you can come to this event. There was no event like this in 2015 for me to go to, where there was all of these cool people that I followed on social media that have proven businesses, that are willing to help people, be surrounded by all of these students and people who are just crushing it. It just didn't exist back then. And so I was kind of on my own, just figuring it out. And I didn't have a blueprint. Nobody told me how to do it the step-by-step way. But the fact that you guys have this kind of event to go to and just expedite what you're doing, it's insane. I mean, Johnny, who I showed you earlier, he wouldn't have been able to get to where he's at so fast just trying to go figure it out on his own, okay? But he took a risk, he invested his money, he invested his time, he did what needed to be done to get himself out of the position. Just like I did it when I decided to max out my credit cards to go buy that first flip and, grind it out, flipping couches until I could do it. So, it's something that I just don't share a lot because I don't know, I kind of don't like to think about it because I'm just like, man, it's just something like so far ago, but I feel it's important to share it like on a call like this because I know so many of you can relate to it and you're not far away from getting out of wherever you are, okay? And if you're a veteran and you're already making good money, I can tell you, you're not far away from taking it to a really high level. It's way easier to go from doing a couple of deals to doing 7 figures a year. We've watched it happen many, many times. So, here's the deal. If you can't make the event, you can also just book a call. You can click that and our team can help you out with the coaching program. It's for those asking, we're going to cover flipping, wholesaling, our entire business model. We have the guest speakers talking about different things as well with wholesaling, with RV parks and glamping. Heather does a lot of short-term rentals for those of you asking. So, it's pretty cool. And I'm really excited about it. So, I would love to see all you guys at the event. It'd mean a lot. And I hope that this webinar could show you that the market is not like tanking. And even with increased interest rates and all this stuff, it's not something that you should be like, oh, I'm not buying real estate. I'm not going to take action. I'm not going to go find deals. Like, no, it's actually a better time because there are a lot of people who think that. And so it's easier for you to go get deals when people are thinking like that. So that's what I got for this presentation, guys. Thank you for watching.